A lot of folks are talking about the Great Rotation, and we have a little bit of a different view on that, at least from ETF flows that we've observed. There's been a rotation, but it's rather been within fixed income, where we've seen strong flows into short, ultra short, and floating rate products with $5.7 billion year to date going into those categories, whereas we've seen outflows of $1.5 billion in intermediate term, longer term, and broad markets. So the flows in aggregate have been positive, almost $8 billion in fixed income, and certainly off of the record levels that we saw back in 2012. But certainly we're not seeing a mass exodus or flows out of ETP fixed income assets. We've seen a real difference in flows on the equity side from January until now in February and March. There's been a complete different type of dynamic going on. The flows have been strong. Year to date, we're at $60 billion, and the majority of that is being driven by the equity side of the equation. But really, since the end of January, the majority of it has gone into developed markets. Majority of that has been in the US equity market, but we've also seen strong growth in Japan. We've seen strong growth in Europe as well. But there's been a clear preference for exposure, in diversified exposure, to developed market equities. Now, we've certainly seen a moderation in emerging market equities on the other side of the coin, where that was on fire in December and January. I mean, January alone took in $11 billion in emerging market equities. We've seen those flows actually turn modestly negative in February and month to date here in March. So a pause, I think, in emerging market flows and a real pickup as economic numbers come in on the US equity exposure. We've seen a bit of a rotation in terms of interest within U.S. equities as well. Sectors have been extremely popular. We've seen about $10 billion flow in there. And then we've also seen some strategy-based exposures as well that have really picked up, particularly equity income or dividend income focused products. We've seen about $5 billion flow in year to date, and it's been a significant pickup from the pause we saw in December, but a resumption of a secular trend where we saw $14.5 billion last year and $18 billion a year before. So the hunt for income has gone far beyond fixed income, and investors are being creative with exchange-traded products to find that exposure. Volatility-based products has been a great story. We've seen a lot of products come to market last year, and we've seen flows pick up significantly. So $3 billion has flowed into minimum volatility based exchange traded products in 2013. We saw $5 billion last year. So investors, while there hasn't been an uptick in volatility per se when looking at the VIX index, many investors are preparing their portfolios for a day when VIX rises.